All right, so let's talk about the polar R squared here. So S&P polar R squared is in a drawdown, a mild drawdown here, but it's been very crazy here. And this was all, I think, the result of what the Fed was doing by screwing around with these markets, with that short-term Fed internals spiking it up. It caused just huge disruptions here, but it's still up over $23,000 since the start here, or right around 23,000, somewhere in that neighborhood, 22, 23,000. And so that's a good sign. Even though it's in a little bit of a drawdown here, I think it's going to recover and be just fine. Circuit breakers, we still have that here in case the market breaks down. These are the levels that occurs at. Now, once again, we have the S&P here showing us the poop slinging rally here, the rally that just keeps collapsing on these Fibonacci lines here. So, you know, this one is no different. That just happens. We did get the gap to fill there. So you can see here that, you know, with each of these rallies, it just collapsed once again. And it's interesting because it's coming up to these Fibonacci lines here. You can see this here. So most of the time when it's coming up to some key level here, some key Fibonacci level in here, and retracing. So if it's not coming up to a speed line, usually it's coming up to one of those levels. You can see this one comes right up here to this point. This is the 0.382 line here. It comes up here, and this one collapses. This was the recent one here back in May and June. Then this is coming in here with the Fed meeting here, and we know that the Fed internals were surging here. So it did try to come up. There was this gap lower here. This was related to the crypto. This is dealing with, it's around June the 10th, somewhere into there. There was this gap that forms, and then it tried to fill it on the Fed meeting. But remember, we had a geomagnetic storm come in on that Fed meeting. So it kind of comes back. Fed is continuing to push up on the internals here. So you can see here the market does get this really big short covering rally here. It fills the gap here. And then once again, we got another geomagnetic storm right here across the weekend. And once again, it starts to sell off here. And so we are just really dancing around these Fibonacci lines here. I think it's really incredible how that looks. Quantitative tightening has begun, guys. So again, remember, they were talking about it and talking about it and talking about it. Nothing happened. They said June 1st, nothing happened. We get into the Fed meeting, nothing happened. In fact, the balance sheet had actually grown a little bit, and then all of a sudden, quietly yesterday, they put out this announcement that they're starting to sell the treasuries. So now it's getting serious, guys. And so again, I think this is just another poop slinging rally, and we are likely to start heading the next leg lower here. So really interesting on the intraday here. We can see these levels are just playing out beautifully. And I think going forward here, we're going to start to see some very, very serious developments coming here in the S&P 500.